There are three sides to India's goods and services tax journey. As the nationwide tax completes 8 years, the government has tax collection data to boast of its success, along with rising number of taxpayers and a robust detection process. Moreover, there is a standardization of rates across the country. Simple, right? Detractors would say not so much. They believe GST has been mired by too many rates and too many rules. Welcome to Beyond Averages, where we try to decode the numbers behind the top stories. Popcorn has become the classic example for anyone to cite as the biggest hurdle to GST, whether it is salted, caramelized or butter. One will also point to differences between roti and parota. As GST become too complicated and with talks of government replacing cess with more rates, is it likely to lead to more chaos? With clamour for rate rationalizing growing, we discuss the good, the simple and the bad or the ugly part of the GST regime and what's the way forward. To discuss this, we have with us Mahesh Singh, Partner Tax Deloitte India, and Saurabh Agarwal, Tax Partner EY India. Welcome to the show. But before we talk to the experts, let me take you through the numbers first. GST collections have doubled in 8 years from 11.1 lakh crore to 22.1 lakh crore between FY18 and FY22. The growth has come post COVID from 14.8 lakh crore to 22.1 lakh crore. Returns have also increased from only 77 lakh filers to 1.22 lakh filers by March 2025. Detection has also gone up. If you look at detection cases, ITC fraud cases have increased from 384 or to 2 lakh cases nearly. These are GST cases, and if you look at ITC fraud cases, they've gone up from 7 to 13,000. Another aspect, if you look at it, is how GST buoyancy has increased. So it was FY17 before the GST era, tax buoyancy was 0.82. After the GST era, from 17 to 23, that's 1.33. Even though it's come down from 1.44 in FY22, it's still above the one number at 1.12. Let me go to our experts first. Mahesh, first to you. You just did a story around, you just had a survey published around the perceptions around GST, which includes both large organizations and smaller organizations. Do tell us what the findings say. Are people happy with the new regime? Mahesh.
Yes.
So the thing has been, you've just published a new survey which says that customer satisfaction has been higher. Do tell us about the surveys. You've been conducting them over the past 4 years. How happy are people with the GST regime?
Yeah, thank you for having me over, Ishan. I think it's been a wonderful journey. It's our 4th year of the survey. We've had 963 respondents. Almost 29% of them are MSME. We've had a bunch of 34 questions. Getting into granular level of detail from a ranking of 1 to 5 or stack ranking the priority of answers. I think this year we've seen a positive sentiment of 85%. I found what you presented on tax collection fascinating. I wish I had my drawing board, but we've moved from 59% to 85% and 59 in FY 2022 and now it's at 85%. And interestingly, the MSMEs are at 82% of positive sentiment as well. And to me, that's more heartening to note. So one end you have tax collections has increased. The other end you have a positive sentiment. One would say, hey, is this not really falling in sync? But as we speak today more, I'm sure we'll bridge how's the positive sentiment high when the tax collections continue to be buoyant.
From a analyst point of view, how do you view GST? We had multiplicity of rates across divisions. It's certainly rationalized that process, but has it done enough?
So, Ishan, if you look at since its introduction in July 2017, and the way the GST buoyancy, as per the data which you are showcasing, has grown in. And if we look at last year, the total collections were around 22.08 lakh crores, marking a robust growth of around 9.4% year on year. The average monthly collections were somewhere around 1.84 lakh crores. If you ask me that what were the factors contributing to this optimistic outlook, I would say formalization of economy was one of the important factor. If you look at the taxpayer base has increased significantly from 60 lakhs in 2017. Now we have around 1.51 crore taxpayers as far as the GST is concerned. The technological advancements, I think, is the second factor which has led to this particular increase, and more so the e-invoicing, which has been made mandatory for the firms with an annual turnover of 5 crores or more. At the same time, while compliance has been painful for MSME, and maybe we will be talking about it at a later part, but if you see the way they have come up with this quarterly filing with monthly payment, this has led to significant improvement in compliance. And then if you look at overall the economic growth, as a firm, we have been projecting, or we have been talking about that in case India wants to maintain a growth of around 6.5 to 7%, the tax buoyancy has to be somewhere in the range of 1.2 to 1.5. So if you look at all these things put together, we do feel that GST is realistically, the collections are likely to go up in near future, and more so when Bharat moves towards Atmanirbhar in terms of manufacturing and various other defense-related activities which the government is now doing.
Mahesh, going back to you, when we were talking about MSMEs, Saurabh raised that point and you also did. Has the satisfaction rates of MSMEs also moved in the same tandem as larger organizations? And two, what are the perceptions of MSMEs as far as the hurdles in GST are concerned? Are they very different from other organizations?
So the satisfaction level of MSME, it is at 82%, whereas the average is 85. So clearly, and that's moved from 78% last year. So there has been an increase in the positive sentiment. Saurabh explained some of the aspects. But responding more specifically to your point, what have the MSME called out in terms of their asks from the GST Council? What would they wish? Is that, and I'll also answer, is that aligned to what industry at large is wishing? So there are 5 points in our survey that have come out. Point number one is certain challenges in obtaining refunds. Two, lack in understanding of certain new age businesses. Expansive interpretations in some pockets, particularly on deeming supplies, export status, as well as multiplicity or duplicity of tax audits and assessments. So let's spend a minute on these 5 topics. In terms of refund, I think we've seen that to be an increase, the concern on that dropping year on year, but with MSME it's still called out. When does a refund kick in? It kicks in when you have an export of business or if you have an inverted duty structure. And when you do have a refund claim, it's natural that you have to file a refund claim and the tax officer will examine your eligibility. And then there are queries that come in revalidating your export status or your inverted duty formula. So the MSMEs feel that a little more simplification on that front will help. And to some extent, it links to point 4 where they said export status is being denied in some cases. That also happens to be on the larger survey, the number one concern saying export liberalization should happen, where there are certain rules in the export rules that create exceptions to the general norm that if you're billing an overseas entity, you should be an export, look no further. There are certain exceptions. I believe the GST Council is abreast and aware of it. Hopefully, there'll be a resolution on this refund as well as this export status aspect. And I think the sentiment varies depending on the state or the central authority. So it's not that it's been pinpointed which part, but on an overall basis, they feel that a little more standard operating procedures around refunds and a liberalization on the export rules will create more simplicity.
Second, you were talking about the buoyancy remaining above 1. You look at the early VAT era and the buoyancy had remained 1 in the initial 5 or 6 years and then gone down. Is it rational to expect that buoyancy from GST as well going forward?
So, at least if you ask me, I think it should remain above 1 for sure. Because, it's very important for your viewers to understand what is tax buoyancy. If we look at tax buoyancy, effectively it is that with every 1% increase in GDP, what is the corresponding increase as far as the GST collections are concerned? When we talk about India today and the way our manufacturing sector is growing, and the fact that we are increasing the taxpayers every year on year, this clearly showcases that at least I am more optimistic on this particular front, that the number of one which is there on the GST buoyancy should not be that much challenging as the system matures. While maybe over a period of next 5 years or thereafter, then there can be some challenges. But the way the growth of the country is and the way we are focusing around manufacturing and being a manufacturer for the world, I don't foresee that there should be any challenges as far as achieving that number of one as far as GST buoyancy is concerned.
Mahesh, on the optimism part, I was reading parts of your survey and there was quite a lot of optimism around GST because you had some future looking aspects as well. If you could explain that for our viewers. And on the second part is the multiplicity of tax rates. I would like to nudge you more towards that aspect as well. Is multiplicity a concern, and if it is, what are they suggesting? What are the suggestions from the corporate side?
Right. So in terms of rate of tax, from the 4 policy areas that got called out, 40% participants said rate of tax should be rationalized. Then we go with export related issues, working capital, and ITC restrictions. So these are the 4 topics that have come out in terms of a policy ask. In terms of rate of tax, I think what industry does get a little worried is that today with the 5, 12, 18 and 28, to be fair, the 28 has fewer in number and the exempt is low. So most of the products lie within the 5, 12 and 18, and 18% is almost 70% of the products. The belief is that isn't time ripe to have a more 2-rate structure and a simplified structure. On the other end, from the government standpoint and the GST Council standpoint, a GOM for rates has been constituted, and there are a group of ministers represented by different states and the central representation as well, where they are examining this, Ishan. So to me, while the finer part of where this will land, time will tell. But one of the things that we did, I was waiting to talk about it, is that it's interesting that it was at a 15.6% RNR when we moved into GST from the pre-GST regime, and we are at 11.6%. So the effective revenue neutral rate has come down. And now with the tax collection going up, the government, I think, the GST Council is reviewing the possibility of whether we can have a more lesser rate structure of a 5 and 18 perhaps. But that was always tricky in terms of how do you really review the list of products in 12, which goes here, which goes there. But I think we are in safe hands by the track record of what has been done, where they would examine what would be good for the economy at large and also eliminate disputes that exist. Because once you eliminate, a lot of the rate disputes are around a company being in this bracket, but a tax authority saying you're in that bracket. And those elimination may even possibly bring up a better sentiment and better clarity. I will talk about the other 3 points, but I don't know if this answered your question. I'm happy to talk about the 3 other policy asks and forward-looking thoughts from the survey.
As well.
Sorry.
Go ahead with the other 3 policy asks as well.
Okay, so I'll do it a little quick. So 3 things. Export liberalization. I did talk about that when the MSME point came up a few minutes ago. I think that time is ripe to look into any business supply made by an exporter of service from India to outside India should be an export. Look no further. There are certain provisions. I won't get into technicals like intermediary or performance-based service. I, for one, believe they've passed their expiry date and time. And I think it'll only do good for the economy at large if those provisions go away, because the disputes around interpreting that itself is the painful point, not the provision per se. 1. 2, working capital. And this is a very sensitive and important point, Ishan, that with 8 years into GST, businesses are now experiencing that sometimes you have a GST credit that's built up, which you really cannot claim the money back from the government. So while it's my money on my balance sheet, I really can't encash it unless I'm an exporter or it's an inverted duty structure. I think that we need to, the council could benefit to review what was the position pre-GST. The VAT laws used to allow a carte blanche refund. So if I had a 15 lakh credit built up as a trader, or for whatever reason, if I may be in a loss, I'm into infrastructure, it takes many years to offset the credit. After a tax audit, I used to get the money back. So that's the ask number 1. saying give the money back in terms of whatever credit I have. So then that money goes back into the economy and gets the economy, gets more investment. There are subset asks around the working capital, around saying allow CGST credit transfer from one state to another. This is left pocket, right pocket as far as the central government's books of accounts are concerned. So should per se be a very palatable, short-term, immediate ask. Certain other ask is to allow a reverse charge payment using the tax credit. And there are other asks around simplifying the GST credit note. So if I were to talk about the top three in the GST in working capital, other than saying give me a carte blanche refund, I would summarize that to be CGST credit transfer, RCM payment, and simplified credit notes. The third topic, and that's the last topic from a forward looking on policy, there are recommendations on operational aspects that I will cover as we speak today. But the aspect on the third one is ITC restriction. So the GST law in its formative form and shape grandfathered certain restrictions that were there in the SENVAT rules. And it could relate to construction services, group insurance services, rent-a-car, outdoor catering. Now, I think with the tax buoyancy and with overall of GST rates being reviewed, time is ripe to also eliminate some of these restrictions so that a business who's incurring any B2B cost, which is otherwise allowed as a deduction in income tax on their books of accounts, ideally look no further, the GST credit should be allowed. I recognize what I'm saying is a little simple than done because there's a lot of revenue involved and there'll be an impact on tax collections. But I'm sure there could be a start for some of them to be eliminated from an exclusion. For example, construction services relating to commercial property. Since the commercial property is anyway going to be monetized and had to be subject to GST, isn't time ripe to remove that restriction? So I think if these three buckets of export, working capital, and ITC restriction is addressed, it would be, at least if not in the immediate, but in the short to medium term, I think industry will really welcome that relief, Ishan.
Saurabh, before I go to you, let me just show something that Mahesh was talking about. Right, and let me just draw a rough graph here. Right, if you look at the revenue neutral rate and how it's moved, and this just moves from our discussion, it was somewhere around 16% when the tax rate came out. FY22, if I'm not mistaken, it was somewhere around 14.5%. And today it stands somewhere around 11.6%. So looking at it from this perspective, would you say that removing all those taxes and keeping two would be enough?
So, Ishan, if I look at it, and I was always having a contrarian view, and if you see my views around it, I don't think so that there is any slab reduction going to happen. There's likely a possibility of certain products moving from one bucket to another, and primarily because of the reason being, say, India's per capita income has increased. Something which was a comfort has now become a necessity for our population. Say, for example, if you take an example of a butter or a ghee, which is currently subjected to a 12% rate of tax. It is becoming a necessity for the larger mass of the India. So how can we bring it down to 5% so there can be a movement which is expected over there? Similarly, when we talk about toiletries like toothpaste is today a necessity. How can we move it from 18% to 12% or 5% is something which needs to be looked into. Similarly, when we look at a two-wheeler, two-wheeler today is not just a mode of transportation. It's a mode of livelihood for our villagers who use it as a mode of compute to transport many of their goods, go to the offices. And at the same time, if you look at all these QSRs wherein the Zeptos or the Blinkits of the world, many people are using it for the purpose of providing services. At the same time, when we look at porter services. So, something which was a comfort in the past is now becoming a necessity for the Indian mass. And therefore, there is a requirement to move those products from one bucket to another. At least in my personal view, I don't foresee that there is any reduction in slabs, or from 4 slabs we can move to a 3 slab structure. That is something which I'm not looking forward. Of course, if it happens, it will lead to reduction in complexity, improve compliance, enhance revenue predictability. But when you look at, and I think you have correctly pointed out, the way the RNR rate is going down year on year, I don't foresee that it will be very challenging for them to cut down on the multiple rates structure today. And even when we look at from a consumer impact perspective, if you move certain goods which are currently in 12 to 18%, it can be inflationary. And we need to be very watchful as to how it will pan out to be. But, I'll add to the point which Mahesh talked about. I'll add two specific points to it. I think one thing which I foresee from a policy standpoint is how the disputes will be settled, because certainty of taxes is becoming more and more important, and maybe something like a arbitration tribunal, which was never thought of in the country, is something which can be looked into to settle upon disputes. And the second thing which I look forward from a policy perspective is having those FAQs which were issued on a sectoral basis. 8 years of GST, a lot of things have changed. The market is dynamic, and the way the businesses are evolving, still a requirement to issue clarifications, make those sectoral committees, having industry experts, having the academicians, and thereafter having the bureaucrats all in all over there, and thereafter coming into certain FAQs which can be released to bring in certainty of tax on multiple issues which industry have been facing. Of course, GST Council has done a great job by way of coming up with clarifications in a time-bound manner to bring in certainty of taxes. But this can be another way of resolving disputes on a going forward basis, and that too in a systematic manner.
Saurabh, now let me move to another aspect of it. You've talked about not reducing tax rates, but what if they're increased? There is a talk about cess going away and new rates being introduced in that place. Would that bring some chaos, or would that just bring stability that already exists?
So, this again has been a subject that compensation cess will be removed. Of course, it has a expiry date, and it has been quite a time when we have been talking about the cess being removed. If you look at a prudent approach, I would say rationalization will be something which is important and not proliferation. Another thing is merger of rates is something which is being talked about, but I don't foresee that merger happening. Rather, I would foresee another tax rate coming into picture, maybe a 35% or a 40% tax rate, which will be applicable on so-called as the sin goods, which are currently subjected to cess. Government can look at also some targeted exemptions, which can help in, you can say, which can take care of the socio-economic concerns without fragmenting the tax structure. And of course, increased tax base is something which will be a focus of the government as far as when they remove the cess is concerned. So I don't foresee that removal of cess will lead to something big. Of course, there'll be another slab which will come, and I also foresee some additional cesses which might be rolled out by the central government, because they would want to put certain funds for a specific purpose so that they can be used for those particular purposes. It can be health, it can be any other purpose.
Fund most likely could also come in with your higher tax on automobiles or other necessities. Mahesh, how do the respondents view cess? And I would like you to keep that cap aside and be an analyst for me again. How do you view the whole cess debate within that paradigm?
See, I think one is from a business perspective on cess. It is, at the end of the day, it's a tax rate of 28, and then there's an additional cess, and there's a total landed price. From those sectors that are into cess are hoping that with that expiry date is having passed by, the cess eliminates and we have a lower tax rate. Now, economics has to take over that if a car is at 28 plus a particular cess, will the government and the GST Council, when they're trying to do a balancing act of possibly giving some more relief for the common man products, will they say all these products will drop to 28? And I think, therefore, from a participant standpoint, yes, they are looking forward to the cess going away, but per se, the cess doesn't cause litigation or disputes. Yes, there could be some interpretation matters there, but the pragmatic expectation is that there will be, therefore, more simplicity from an invoicing standpoint and a billing standpoint. And therefore, those people who are buying these products that have cess today can claim a credit only if there's output cess, but they can perhaps claim the credit if it is under the normal GST. I don't think the objective expectation is cess completely goes away in these products, all the rate significantly drops. That could be a wishful thinking or a ask in the medium to long term, but immediately, like Saurabh said, maybe there could be a little increase because that already a product has been subjected to a total landed tax. And I think that's the lens that perhaps the council is looking at as well in stage one, Ishan.
One last question to you, first to you, and then I'll move to Saurabh on that part. We started the show discussing the differences in roti and paratha and popcorn, salted, caramelized, and other issues. What is your suggestion in that regard? How can those be solved? Because if you look at some of the American tax systems, they look much the same. There's not much difference. But other countries have moved ahead and simplified these uh, anomalies that exist in the system, I would say.
See, I mean, American, it's not a VAT system, it's a sales tax. And I'm glad you called out that our system is, a pure VAT system. There were a lot of naysayers when we had the state and central system of taxation getting merged. Today, we have been looked at as a poster boy of how to get your GST and VAT system right in an economy this large and this diverse, particularly on e-invoicing, e-way bill, and e-reporting. So other countries which we would have thought is ahead of us are actually trailing behind, and they're yet to even go live on e-invoicing. So I think kudos to the Indian government and the state governments and the central together. This is one harmonious group that has made us look good in the rest of world. And I think that that's something that I definitely wanted to log, because I do understand that there are aspects relating to product classification which may seem a little bit unfortunate, or it may seem even at times amusing. But I think let's look at the genesis of it. The genesis is that when you're merging all these rates, and there's already been, if you remember back in about 2018-19, there were 220 products in the 28% rate. That
Yeah.
has dropped to less than 30 odd number of products right now. So the government has already reduced all those, and that's how the RNR constantly reduced. Having said that, in that process with the rate of 5, 12, 18, take a prepackaged food, a food item. If it's prepackaged, it's something. If it's with a brand, it's something. If it's without. So that fallout is there. I don't want to gloss over that problem, but in the larger scheme of things, that problem can be well addressed by granular looking into which are those sectors that actually have this issue, and either coming out with abundant clarity or addressing them regardless of whether we have a two-rate structure or three, doesn't matter. Let's just address them. But when you look at addressing from an industry standpoint, and nothing wrong from their lens, they'll say let's reduce it. From a government standpoint, they'll say let's increase it. So somewhere that midpoint is always a challenge. But I'm sure larger wisdom and the collective wisdom of states and center should get us to a satisfying position, Ishan. And I think I do want to log, because it's the last point, that from our survey as well, dispute resolution has been called out from an operational aspect to be a important point, because there are litigations, whether it is the products you called out or something else. Without the tribunal forum being there, where do I go? I can't knock at the high court doors, always. And I think the government has painstakingly got a framework in place. There's also the judiciary, which you have to respect, where it's passing a test of whether the structure is right or wrong. Me being I mean, if I were a betting guy, I would bet that this year we would certainly have our tribunals launched before my next survey next year, and the sentiment on dispute resolution should be coming down as a challenge, Ishan.
Thank you. Saurabh, moving to you on the same aspect, the anomalies in the system, how do you solve them? And can we see them being solved in this short run, or is this are these the pains that you go through over a period of time?
So, Ishan, it's a big reform which has come from the government side as far as GST is concerned. Everyone was thinking in the past in the industry how the rollout will happen. There were teething issues earlier. There are some bit of these anomalies. But if you look at, and I think we have heard Mahesh talking about it, the government did a fabulous job over here. Whether it is e-invoicing, it is return filing, matching of credits, and the world is looking at us. And the world is trying to adopt that approach from us. So some bit of anomalies are likely to be there. But let's look at how the government has been able to resolve those anomalies. From the government's perspective, if you look at the GST Council did a commendable job. Both Law Committee and Fitment Committee, they kept on making recommendations, and the government tried to settle the dispute then and there by bringing in certainty of taxes for the industry for the past as well as for the future. So therefore, I think while the anomalies might be there, and when they relook at the rate rationalization, I'm sure they will look at some of these anomalies. But on a going forward basis, if I remember correctly, last to last budget, they introduced Section 11A, something which was there in the erstwhile excise law as well. I think if they come in and they make it operational and they issue operational guidelines for that particular Section 11A, which says that if an industry has taken a particular stand, then the government can look at it whether it was bona fide or not. And if it is in the interest of the industry, they can settle the dispute on as is where is basis for the past and therein issue a certainty for the future. I think if that happens, many of the, you can say at a larger, from a sector perspective, everyone will really feel that particular thing to be benefited and it has to be made operational. I'm not saying while the GST Council is still working in a similar manner by issuing in as is various clarification. But if we make it more formalized as a process when the section has already been introduced, that will help the cause quite a lot. Of course, when you come up with such a big reform, there will be certain anomalies. Over a period of time, as and when we are highlighting these anomalies as consultants, as Chamber of Commerce, and as industry, I think what we have to look into is whether the government's approach is to resolve these anomalies or not. What we have seen as a firm is that the government is very proactive. And when you put forward the points in a macroeconomic perspective and continuously follow up with them, I think over a period of time, while there can be some bit of delays, but I think they are resolving all the disputes. So I think I would say that the government is very proactive in the approach as far as resolving these disputes are concerned.
A rising customer satisfaction rate, that's the envy of most politicians in GST, has achieved that. And being the poster boy of reforms, moving from VAT to the GST framework, along with other issues as well, resolving them in time. GST has made its mark, but one thing that goes unaddressed most of the time is the GST Council. The way states and center came together, formed a council and deliberated on issues is a hallmark. People have been asking to replicate the same model for other factor market reforms as well on land, labor, so that the country can move ahead to its goal of a Viksit Bharat. I thank my experts for coming on the show. We'll hope to have you back again soon, discussing more indirect tax changes that happen across the country and more reforms that are happening. Thank you for coming on the show.
Thank you, Ishan. I think the bronze anniversary, we've struck gold as a country, is my assessment. And thank you again for having me over.
Thank you.
Thank you. Thank you, Ishan.
Thank you. The GST regime completes its 8 years with a lot on its back in terms of success. There are a few drawbacks as well, but the government is looking at ways to move past them. Moreover, with customer satisfaction rising, GST is becoming the darling of India and also a thing that the world is looking up to. We'll be back next week with more news and analysis. Thank you for watching.